Welcome to the new Forex forecast for this week. As always, we're going to start off with the fundamentals, move on to the economic calendar, and then the technical analysis. The first article that we're going to start off is what Trump is aiming to achieve with his new tariff plans. I'm going to give you guys a quick overview summary of what this article is talking about. On February 1st, President Donald Trump signed an order imposing significant tariffs on imports from Canada, Mexico, and China. These tariffs, they're going to take effect on February 4th at 12:01 a.m., which include a 25% tariff on imports from Canada and Mexico and a 10% tariff on goods from China. This overall represents a dramatic shift in the U.S. trade policy. It's going to push import taxes back to the forefront of the U.S. economic strategy. And these new tariffs, they mark a significant departure from the current average U.S. tariff rate of about 2% on industrial goods, which accounts for majority of the U.S. imports, which accounts for about 94% of the U.S. merchandise imports by value. The aim of these tariffs is to bolster American manufacturing, raise government revenue, and gain leverage in the international trade negotiations. As you continue down, this is the exact thing that the Treasury Secretary outlines here. So he says that, the purpose of these tariffs is to remedy the unfair trade practices, raise revenue for the federal budget, and then also, again, to leverage in negotiations. And as you continue down, they start to go a little bit more deeper into all of this. So you have all three of these sections as you continue down to the article, which is going to give you a lot more details. And then as you go further down into the article, it also explains how the tariffs work and who pays for these tariffs. And overall, the sentiment here is that these tariffs could act as a double-edged sword. So while they might promote manufacturing in the US, for example, by encouraging domestic production, they also carry the risk of increasing costs for consumers and businesses. And the US consumer is going to bear the brunt of these higher prices, which could suppress spending. It could motivate consumers to become a little bit more conservative with their spending. And overall, these tariffs, that the counter tariffs being imposed by Mexico, Canada, and potentially China as well, it could hurt the U.S. Exports, and it could lead to consumers overall, again, being more conservative, leading to an escalation of trade tensions, and leading to an overall disruption in the global supply chains. So while these tariffs are expected to raise substantial revenue for the government, they also hurt U.S. exports, and they lead to job losses in industries that rely heavily on international markets, and particularly if you're looking at the U.S. market, more like the tech companies as well. And the long-term effects of this trade policy could also stifle the global economic growth and contribute to inflationary pressures, reducing the overall purchasing power of U.S. consumers and leading to more inflation overall. So this decision by President Trump to impose across-the-board tariffs represents a significant shift in this U.S. trade policy, and that's going to create, when you're looking at the financial markets, short-term volatility. So when you're looking at equities, for example, and we'll go deeper into this as we move on to the technical side. So the equity markets, whether you're looking at US30, NAS100, it's all going to face more downward pressure, particularly in sectors with significant international exposure. When you're looking at safe haven assets like gold or even currencies like the yen, it could see a rise overall in the long term as these trade tensions continue to increase, because they benefit from this risk-off sentiment from the consumers. Cryptocurrencies, for example, are expected to experience mixed reactions, and USD JPY, GBP JPY, they are also going to experience increased volatility as there's a shift in this investor sentiment overall. So what we need to do as we're looking at these tariff news and as we're going through the rest of the articles is understand that there's a lot of mixed sentiment, and a lot of this is going to lead to more of a risk-off sentiment from the investors. So we should be prepared as traders and investors for higher market volatility and adjust our strategies to account for the potential long-term impact of these tariffs on global trade, inflation, and economic growth. The next article that we're going to go over is right here. So Canada, Mexico hit back at Trump tariffs, and then China is also going to be the next article, but they're also tapping into the potential of retaliatory tariffs here too. So same thing, I'm going to give you guys a quick little overview of this article too. Basically what's going on is Canada and Mexico, they have vowed to retaliate with their own tariffs, targeting approximately $106 billion in US goods. China has also pledged countermeasures, though it has refrained from announcing any immediate retaliatory tariffs. And this move is driven by concerns over immigration, drug trafficking, and US trade balances, particularly with the neighboring countries. So the Trump's tariffs, they raised the average US tariff rate to, again, 10.7%, which is a sharp increase from the previous numbers that we have been seeing. And it's also going to, again, disrupt the economy, leading to higher prices for consumers and causing supply chain disruptions. The Trump's tariffs are expected to have a broad economic impact, exactly what we went over, in the previous article, but with a projected 1.2% hit to US GDP and a 0.7% increase in core inflation. This is, again, going to strain the US consumers and who are already, grappling with inflationary pressures. The tariffs are going to raise the cost of everyday goods, including food, housing, gas, and all that could dampen the consumer spending and the economic growth. And on top of that, of course, the tariffs from Canada, Mexico, and potentially China could continue to harm the US exports while disrupting supply chains, particularly in industries like automotive manufacturing, which is highly integrated with Mexico and Canada. The Mexican economy is also at the risk of entering a severe recession if the tariffs remain in place for an extended period, which would lead to a depreciation of the Mexican peso and further strain the trade relations overall. So this entire article is going to go a lot deeper into, these facts, these numbers. And as you continue down into this article, you're going to get a lot more details about all this stuff. But that was a quick little summary about that. Once again, why do we care about it as traders and investors? Because we're looking at what type of sentiment is it setting up for the market. A lot of it is risk-off sentiment. And then here we have news with China, where the ongoing trade war, again, it's having a major impact on the global growth expectations, particularly in China, which is facing already a slowdown in exports due to higher tariffs. And the tariffs could result in a 0.9% reduction in China's GDP, with export sectors particularly vulnerable while these tariffs are going on, and if there are any potential increases in these percentages. And the Chinese government may respond with additional fiscal stimulus to offset these losses, as well as potentially easing monetary policy, which is going to lead to further weakness in their currency. The global economy is also going to experience rising inflation as costs of goods increase due to these tariffs, once again putting pressure on consumer purchasing power and the corporate profitability, especially in the sectors that rely heavily on international trade. And this dynamic could overall just lead to more stagflationary risk, where inflation rises while the economic growth, stagnates. And central banks may find themselves in a more difficult position compared to where we are right now on a global scale, where they have to balance inflation control with supporting growth, and that overall just further complicating market conditions, leading into, against the investor sentiment of more risk off and moving into more of the safe haven currencies, commodities, and things like that. Once again, as you continue down to the article, you get more of these details, but that's a quick little summary. And then we have 2 more to go. So here, this one is particularly about the equities and more about the stock market. And if you're trading US30, NAS100, this is something that you want to know a little bit more about. And quick little summary about this article as well is that the tariffs overall, they have sparked a sell-off in the global stock markets. And you see that the US dollar is also gaining strength. The Canadian dollar, Mexican peso, and the euro, they all saw a bearish pressure as the markets opened up, but the US dollar started to gain more strength as the traders sought safety in the anticipation of higher inflation and sustained US interest rates sitting at the levels that we're sitting at the moment, and potentially even just maintaining those interest rates for the coming months as well, rather than decreasing those interest rates as we are seeing happening in the other parts of the world. And these new tariffs are expected to have, again, huge impact on global economic growth. Canada's economy, which is heavily integrated with the US, could also potentially enter a recession due to the new 25% tariffs, while Mexico's economy is already facing similar risk. For China, these counter tariffs are also very likely, but with the Chinese government's ability to devalue their own currency, their response may be more focused on market-driven strategies rather than direct counter tariffs. And the tariffs could also increase inflationary pressures in the US, particularly, on sectors again that rely heavily on imported goods and sectors and companies that rely heavily on international trade, leading to higher consumer prices. So with the growing concerns around inflation, the US interest rates are most likely to remain elevated at the level that we're at. We're going to potentially see the strengthening of the dollar, worsening of economic conditions for foreign economies, and this supports the US dollar, leading to a weakening of other currencies such as the Canadian dollar, the Mexican peso, or the euro. And the final article here we have is gold. Once again, I'll give you guys a quick little summary, but I think this is going to be better understood when we move on to the technical side. But we're starting to see here that gold is edging lower after President Trump imposed the tariffs on imports from Canada, Mexico, and China, and the dollar started to outweigh that safe haven demand as the world braces for trade wars. So typically we see that there is safe haven demand for gold during times of geopolitical uncertainty, but the strengthening of the US dollar and the potential for sustained interest rates have been pushing gold a lot lower. The tariff announcements, they again signal a sharp escalation in the US-China, US-Canada, US-Mexico trade wars, with the retaliatory tariffs being enacted. This increases the risk of broader global trade war, which could also, again, disrupt the global supply chains. And the reason why I keep emphasizing that a lot more is because those are the things that will be impacting the swing trades and the longer position trades that we're looking at. Those are going to be things that the market is going to start to price in as well. And overall, the economic growth and keeping the inflationary pressures elevated. In the US, the expectations of higher inflation and sustained interest rates, that's what's pushing the dollar higher. And this dynamic is usually negative for gold and cryptocurrencies, which do not offer yield and are generally seen as alternative stores of value during periods of economic uncertainty. That's why we saw a massive sell-off happening on the crypto side as well. And while traditionally gold benefits from geopolitical instability, the dollar is rising, coupled with, again, because of higher inflation and interest rates expectations. But that's going to keep the gold under pressure in the short term. But as the trade war continues and progresses, and the impact on global growth becomes a lot more clear on these foreign economies, gold could potentially see a pushback up with the demand as a safe haven commodity. Overall, the sentiment, again, with all these articles from an investor perspective, is that there's a lot of mixed signals, there's a lot of mixed sentiments, but the key areas that we are expecting will be impacted by these news and this tariff is when it comes to equities, for example, US30, NAS100, we're expecting more of a negative impact. So as tariffs generally lead to higher costs for businesses and consumers, we start to see that there's more downward pressure on the stock market, particularly, once again, sectors that rely heavily on international supply chain. The US30, which is tracking large cap US companies, it could face a pullback as investors digest the potential economic fallout from these tariffs. There's also concern about counter tariffs from affected countries, which could also further harm the global trade. Same thing when you're looking at NAS100. Most of these tech companies rely heavily on global supply chains and international markets for revenue, and the added cost from these tariffs, it's going to harm their profitability. And if these measures lead to an economic slowdown or disrupt international relations, then tech stocks is where we're going to see a majority of this downward pressure. When you're looking at gold, we're starting to see, like I said previously, that as the trade war progresses and the impact on global growth becomes more clear, we can start to see that there will be a longer term positive impact on there because that's where a lot of investors move to a safe haven commodity. When you're looking at USD JPY or GBP JPY, we're looking at mixed impacts. So both the dollar and the yen, they could experience the volatility. The dollar might weaken in the short term due to the concerns over inflation and trade disruptions. But again, there's the expectation of those high interest rates. That's where that mixed impact comes in. While the yen, it could also strengthen as it tends to be viewed as a safe haven currency during periods of heightened global uncertainty. So we're expecting a lot more volatility with GJ and UJ. When you're looking at Bitcoin and Ethereum, you're looking at more of the volatility and the the risk on versus risk off sentiment. So cryptocurrencies like Bitcoin, Ethereum, they're going to experience those mixed reactions because on one hand, the tariffs could create an environment of inflation and economic instability, which is going to make Bitcoin more attractive as a store of value. But on the other hand, a broader risk off investor sentiment is where the investors are going to pull back from these speculative assets. And it's going to lead to short-term volatility in the crypto market. And we're going to go over all that stuff on the technical side. Looking at the economic calendar, we're starting off quite easy. A lot of yellow folders. You have a bank holiday from China, so we're not expecting, from purely economic data aspect, a lot happening. But of course, the market is already starting to price in everything that happened over the weekend, and then even potentially leading into those tariffs that are going to be imposed on February 4th, so in about 2 days. But tomorrow, as we continue down, London session being quite quiet overall, leading into the US session, you have the ISM manufacturing PMI coming out. You have the manufacturing prices also coming out, and a lot of low impact data points overall. Tuesday is when things really start to pick up. That's when the tariffs will be imposed. And then that's when things kick off for the NFP week, where you have the JOLTS job openings coming out. We're expecting less jobs to open up. Continue down in Asian session, you're going to start to get some news coming out, employment data from New Zealand. And then London session, again, being quiet for the most part, leading into US session on Wednesday. You have the ADP non-farm employment change. We're expecting the number to start increasing here as well. And then you also have the ISM services PMI coming out. Asian session being a bank holiday for New Zealand. You also have some FOMC members speaking late New York session. Thursday being more high impact because you have interest rates coming out from Bank of England. They're expecting a 25 basis point cut here. And then right after that, you have the challenger job cuts. Then you have the unemployment claims, as we usually do every Thursday. And then finally, you have some FOMC members speaking, once again, closer to the end of New York session. And then on Friday, you have NFP coming out. So this week, it's heavy on the second half of the week, from Wednesday down with employment data leading up to NFP, but there's also a lot happening on a macro scale. So I'm expecting a lot more volatility in the markets this week and a lot more opportunities to open up. We're going to start off with US30. So we've had last quarter, massive top break, rejected that, pushed back down. And then this quarter, we had price pushing back up and tapping right into that previous resistance area, which these are all the levels that we're going to adjust as we drop down to lower time frames. But this is important to understand the higher time frame levels, because the higher the level, the stronger these levels are going to be. And then what I'm going to mark off is the candle body open of this quarterly candle here too. So that tells me that if this candle flips back down with all the news that's coming out with the tariffs and everything, then we know that this quarterly candle is also going to be bearish, and we can look for a potential push back down, because that tells me that the bullish volume in the last quarter did start to die down a little bit. When you come onto the monthly time frame, we see how that's a clean range on the monthly time frame where you had a nice push, and then after that, the last 2 months, we have been closing in this range itself. And then this month, it's already the second day and the first day really of the markets in February. We're already starting to see that downward pressure, that heavy downward pressure as price keeps pushing back down. No top wick whatsoever on this monthly candle. That tells me that we didn't even try going bullish whatsoever. What I'm going to do is mark off that teeny bit of bottom wick rejection that we have. So if we keep pushing below that, then we know that we have those continued sellers pressure to the downside, and that is something that we can take advantage of. That's that 43,940 mark. And keep pushing. If we maintain above it, then we can look for any potential buy opportunities. All of these are going to be quick scalp opportunities until price breaks these higher time frame levels, and then we have swing trade opportunities after that. Coming on to the weekly time frame, you got that massive bullish pressure from here. We got that little bit of a corrective move happening in December before pretty much all of last month. We kept pushing back up. End of January, we rejected that with a weak bullish almost doji closure here. New week started, new monthly candle started, no top wick whatsoever. So if we break below that, we pretty much have this little bit of a room to break the previous bottom wick rejection, and then we can look for those continued sells to first tap into any of these previous areas right here. So that's the first area of target, and then a continuation from there is a straight down to 42,400 level. You come on to the daily time frame. We've corrected this entire seller's pressure, came to the upside, We were consolidating there previously. We consolidated here for a couple of days before a nice sell-off. So on Friday, we closed off bearish here. And then today we already had this massive sell-off. So if we can keep breaking below this, then we have sells coming back down here and then a continuation from there. Or are we looking into potentially price coming back down a little bit deeper here and then bounce back up to come back into those areas? But once again, with all the tariff news, we're going to start to see more of a downward pressure, potentially coming back down deeper into this 42,800 to 42,400 level as investors keep moving into that risk off sentiment. Starting off already on Friday, massive sellers pressure. So right now we're just waiting to see if price is going to hold on to any sort of support right here. I want to see some bullish closures here prior to a push back up for any buy opportunities. And if price doesn't do that, then we're looking for those continued sells to the downside. But I want to see price clearing out of this completely before looking for any sort of sells. If not, you look on the 1 hour and the 4 hour time frame and you want some support to be formed here before a push back up. Something similar to this, where you had that candle closure and then you had a retest of the zone and then a push back up, and those are your clean buy opportunities that we're looking at. Let's take a look at NAS100. Quite similar to US30, sitting at those all-time highs, starting to reject those as well. With this new quarterly candle, the candle has already flipped back down bearish. And then I'm going to mark off the bottom wick rejection for this one instead, because the candle has already flipped back down bearish. So we're looking for our range of where's price potentially headed. $25.90. And then what I'm going to do here is create a zone right into this level. So if price can continue breaking its own monthly bottom wick rejection, then we know that we have those sells to continue pushing back down here. If price is simply making a support here and not trying to pretty much figure out where is it headed, then we want to make sure that we're only looking for scalp opportunities and not really trying to hold out a swing trade opportunity here or a day trade. When you come onto the weekly time frame, this zone starts to make a little bit more sense, where you have a quick little fake out, price comes right back down, and we're not able to break past that for almost 2 weeks. Third week, we finally do that, and then we start to get some wick rejections here. And then this week, same thing, barely a top wick or anything like that, keeps pushing back down. And we had a bit of a bottom wick already as this candle started forming, and we're pushing back down. So we're rejecting the sellers down here as of right now. The London session hasn't opened up for the week yet. Neither has New York. So we do have a lot of opportunity. It's only been Asian session so far. So we do want to give price enough room to wick around and make any support resistance levels that it might want to. What we're looking into is if price can reject this and close above this area and then push back up. So this is the daily time frame. We want to be very careful, especially as we start moving closer to London and New York sessions to figure out where is price headed. But overall, we do start to see from higher time frames and down that you have all this little consolidation that's being formed. So when you come onto the weekly time frame, this is all your consolidation that's being formed right in that. So that's your range when you're looking for any sort of day trade or scalp opportunities. Drop down to the 4 hour time frame. We've had that massive seller's pressure from, again, Friday, and then we continued that today, and it seems like we're rejecting right into this zone. So once again, you wait for support resistance to be formed, and then you look for your proper entry. So for any buy opportunities, you want a proper support, and then a continuation back up. For any sells, a proper resistance, and then a sell back down. As we discussed on the fundamental side, UJ and GJ are going to see a lot of volatility, a lot of mixed sentiment, mixed impacts happening. So that is something that we want to be careful of as we drop down to lower time frames. Starting off with the quarterly, you have those candle body highs that are being formed here, that resistance at 197. And then you also have the bottom wick rejections at 189.4. all that bottom wick rejections, and then you have rejections right here too before that massive sell-off. So that's kind of the range that we're sitting in on a quarterly time frame. You come onto the monthly, you start to see how price has been consolidating here for many months, and then we have that gap that started happening when this new candle started forming. So we start to see that the yen was gaining a lot more strength, and then of course now price is starting to push back up. So we are starting to see that potentially the pound overpowering the yen so far, but again, that's that mixed sentiment of risk on, risk off from the investors. So that's where the monthly candle last month closed, and then here is the formation of the new one, and price is starting to push back up here a little bit more. So what I want to see is, can price completely clear above that for any continued swing trade opportunities. If price is simply making a top wick and then flipping back down, then we do have a pretty good range coming down to 189.4 level for any continued sell opportunities, so around 131 pips. You drop down to the weekly time frame, starts to become a little bit more clear, where you had that bottom wick rejection, price push back up, you got a candle closure here, and then the new weekly candle gap down and starting to push. So for any buys, once again, as price breaks above here, you have those continued buys, kind of mimicking a move here. If not, a top wick rejection, price flips back down, then you have sells coming back down. Onto the daily, pretty much the same thing. You had a bullish close here on Friday, and that's the momentum it seems like we're trying to push for. Come on to the 4 hour, that gap. So wait for the gap to be filled, or you can also look for that trade opportunity. It is Asian session with GJ, so you can look for price to push back up. One thing about the markets is that the gaps will always be filled, and you will have tons of examples of that. So you had a gap right here, and price did come back up and fill that. And then, you know, as further back you go, the more examples that you're eventually going to see here too. UJ is going to be quite similar. So you have price, same thing, pushing back down bearish, and then on the quarterly time frame, and then you have 157.3, still bearish. I'm going to mark off the bottom wick rejection, 153.7. You come onto the monthly. That was the candle body high of the open of the previous monthly candle, and then the bottom wick rejection of the previous monthly candle. This monthly candle did gap down a little bit, but it seems like we're starting to push back up bullish. Let's continue down onto the weekly. So we approached previous levels of consolidation. You had some consolidation here, same thing here. Price started to push back down. We rejected that. We rejected all the sellers here, and then this week we're already starting to push back up. So if price can continue that bullish momentum to the upside, you're good for any potential buy opportunities on UJ as well, especially as investors are moving more into the dollar around the expectations of inflation and the maintained high interest rates. When you come onto the daily time frame, you have a bit of consolidation, then price pushes back down, and then we kind of just hang around this area here for almost a week. And then today we started to push back up. So if price can clear above that zone, then you're looking for any potential buy opportunities for around 60 pips to almost 136 pips. If price simply rejects that and then pushes back down, then you still have sell opportunities. But all of this is going to start off as scalps or even potential day trade before it turns into any potential swing trade. So as you can see, there's a lot of volatility, a lot of volume already in the market, and it's just going to continue for the rest of the week as price starts to price in employment data, NFP, JOLTS job openings. There's interest rates that are coming out from the UK, and then you also have any tariff news that are happening on a global scale. Now looking at gold, you have on a quarterly time frame sitting at all-time highs at 27.83. Top wick rejection already broken the previous quarterly highs, 28.20. And I'm going to drop down to the monthly to mark off any potential support areas. It seems like that is the previous resistance that price broke past. We rejected that last month, and then this month already trying to push back down a little bit. So the range that I'm looking at based off of higher time frames is 27.45.8 up to 28.20. Come onto the weekly time frame. Nice resistance, massive top wick rejection, a corrective move, a little bit of consolidation here, and then finally a nice push that happened all of January. And then also, yeah, pretty much all of January. And then this week already starting to push back down, bearish, drop down to the daily. What I want to see is, can price continue breaking its own bottom wick rejection here? If that happens, then the first area that I'm going to target is going to be this resistance right here. And then a continuation down from there coming into this 27.45.8 level. So that's a continued sell opportunity to come back down here, given that, you know, investors are strengthening the dollar a lot more gold. But as tensions continue to increase and everything like that, and even from a technical perspective, we do want some corrective moves to come back and tap into this multi-week and multi-day consolidation to grab that liquidity and then finally push back up from there. You come onto the 4-hour time frame, as price continued to push, there was a lot of bullish momentum, maintain that consolidation, push back up, rejected into this area, and then On Friday, we came back down and closed bearish. Today, we gapped up a little bit, made a top wick, and continue to push back down. So I do think that there's a lot more volume to come back down a little bit deeper into this 2770 area, or even a continuation down from there. So there's still a lot of good opportunity setting up for gold overall. For any buy opportunities, you obviously want a strong support and then a push back up from there. You have Bitcoin. We're going to start off on the monthly for Bitcoin because we do have enough data points here. But we have started to drop back down below that 100K mark. So I'm going to mark off the current body highs for the monthly, which is sitting at 102,600. We're starting to break below the previous resistance areas. I want to see if we can tap into 93,750. And then from there, we're going to start to target these bottom wick rejections here. So even coming back down into 89,000s and even further down from there. You come onto the weekly, you're starting to sit in this multi-week consolidation. We're breaking the previous week's bottom wick. Already have, so you still have that continued momentum to the downside. What you do want to be careful of is potentially price coming back down and mimicking what it has done in the past, which is just bounce off of this area and then push right back up until it's ready with, you know, any sort of market sentiment to figure out which way it wants to go. So we've had massive sellers pressure here as well, and the price just kept closing above this before a quick little retracement. Try to continue breaking below this 93,750, couldn't do that, push right back up into the 100K. So that is something that you want to be careful of as you're looking at the current price action. We start to consolidate it out above that 100K mark, finally got that push because of the tariff news, of course, and then from there, we want to see if price is going to continue tapping into this. This is your quick scalp opportunity, even day trade, depending on how long it takes to play out. And then here is where you want to be extremely careful to make sure that you're not getting stuck in any sort of fake out here. You drop to the 4-hour, same thing. You had a little bit of consolidation here on Friday. And then over the weekend, we start to see the seller's pressure. And then whenever the tariffs were announced, that's when the pressure pretty much intensified. And we keep pushing now that the market is open. So even on the 4-hour time frame, you're entering an area of previous consolidation where you want to be extra careful prior to looking for any buy or sell opportunities. For any buy opportunities, you're waiting for a support and then a push back up. For any sell opportunities, I would want price to break below this, or you can even take advantage of it right now as it keeps pushing and look for those continued sells to keep pushing further down. Use the lower time frames if you're going to look for those entries. Use the 1 hour, use the 30-minute, but I wouldn't drop anything lower than that for crypto right now, given the volatility. Ethereum, same thing. We're going to start off with the monthly. So price is starting to push back down. You have that bottom wick that's being formed here on the monthly at that 2748.6. That's the level that price needs to break below in order for it to continue pushing further down. And you can look for those continued sells to come back down into this multi-week consolidation support. So right here, and then a push from there. So let's see if price can continue pushing back down a little bit deeper given the news, or is it going to simply bounce off of this 2748 level, drop down to the weekly, and you start to see this entire area. So that is where support has been formed multiple times. That was a previous break and retest resistance before a massive push up. And then that's kind of the area where price was holding out at for a couple of weeks before a little bit of a sell-off and then push right back up again. And then if you look to the left and keep going, you start to see the same thing where you have that break and retest area right here, that little bit of support here. So these are just areas of liquidity essentially that price is starting to break out of. And if it can continue doing that, if it can continue breaking the previous week's bottom wick rejection, then you have that continued sell to come back down into this next zone of consolidation. If price simply holds onto this area as support and then pushes back up, you have a zone to zone trade that's setting up. So then you can look for a trade to come back above this 3,000 mark, coming into this 3070 or even higher up into the 3132 levels. When you drop down to the daily, massive seller's pressure that really started off on Saturday, continued all of today, and then also the new daily candle that's starting to form, you have price already pushing back down bearish. But once again, be very careful because price has already rejected into that area previously. So that's pretty much it for this week's weekly forecast. If you guys have any questions, as always, feel free to comment or reach out to me on Instagram at SharmaFX. But I will see you guys for the next weekly outlook. And I hope you guys have a great trading week. And make sure you guys are managing proper risk management and not over trading or doing any of that stuff. There's going to be a ton of opportunities in the market this week. Just wait out for the fundamentals.